What's up, millennials? As you might know, I've done many videos about EVbox already, but sometimes people ask me about a comparison between EVbox and Blink Charging. So here we are. For full disclosure, TPGY, which is going to merge with EVbox, is currently my largest position, and I do not own any Blink Charging shares. Today we're going to talk about valuations, numbers, and charts. So let's do it. As you might know, a while ago on February 3rd, I made a valuation video, or a comparison video rather, between EVbox, ChargePoint, and EVgo, but I did not include Blink Charging just yet, so that is what we're going to cover today. So let's first of all start with the amount of shares that both companies have, so we can arrive at a good market cap right now, and then we can also arrive at a price to sales ratio, and later on we're also going to arrive at an enterprise to sales ratio. So for TPGY, I've looked at the updated investor presentation from just a few weeks ago, I believe, when I created a video about the updated presentation, of course, of TPGY, which is going to merge with EVbox. And we can see that they are going to have about 140 million shares outstanding after the merger. Currently, they have maybe 35 million or whatever. But after the merger, this is going to be the number 140 million shares. So that is also the number that I've put over here in my Excel sheet. And then we're going to take a look at the shares, the amount of outstanding shares of Blink Charging as of this moment, or actually as of May 10th. So just a week ago, I think. Yeah, just a few days ago, actually. This is from their latest Q1 filing of 2021. And we can see that they had about 42 million shares. So that's the exact number that I used over here. 49.9 whatever million shares in total. The next number we're going to need is the price per share to arrive at a market cap for both companies. As we can see, TPGY is currently trading at $13.94. So that is the number that I'm going to put over here, $13.94, which probably is going to change in a second, but hey, who cares? And then we're also going to take a look at Blink Charging. The current price is right now $28.61. So that means that we can now take these two numbers we have been calculating. The amount of outstanding shares multiplied by the price per share is, of course, going to take you to the market cap. Now, do keep in mind for TPGY, this is the pro forma market cap. It's not the current market cap of TPGY, but the pro forma market cap, which basically means the market cap after the merger has taken place. So we can see that if you take this amount of outstanding shares of 140 million shares and you multiply that by the price per share of $13.94, of course, then you're going to arrive at this market cap of almost $2 billion, so $1.95 billion. And if we do the same thing with Blink Charging, 42 million shares multiplied by $28.61 per share, we can see that the current market cap is $1.2 billion. Now, do keep in mind, because sometimes I see a lot of people saying, well, Blink Charging is more expensive than TPGY. How is that possible? And they usually only look at the price per share, which in this case definitely is, twice as high as the price per share of TPGY. But you always need to take a look at the market cap instead of the price per share, which is way more important. So we can see that the market cap of TPGY, which is going to merge with EVbox, is actually about 50% higher compared to Blink Charging's market cap right now. For the next step, we're going to take a look at the price to sales ratio. And right now we know the price, which is the market cap. We know those numbers, but now we need the sales, and that is going to be the revenue. And for now, I'm going to take the revenue of 2021. So we're going to calculate the numbers for 2021. Now, if we take a look at the updated investor presentation for TPGY, we can see that the revenue for 2021 is going to be 120 million euros. That is very important to remember, because here we're talking about euros. So we need to bring this back to dollars, and right now euro dollar is more or less 121. So for every euro there is 121 in dollars. So that means that we basically need to multiply the amount of revenue, 120 million, by 1.21, and that is going to give you more or less $145 million in revenue for this year, for 2021. So that is the number that I put over here in my Excel sheet. Then we're also going to do exactly the same thing for Blink. So we don't have a guidance number for 2021 just yet. I wasn't able to find any guidance numbers for 2021. So we're just going to estimate the amount of revenue they are going to get in this year, in 2021. What I did notice in the latest Q1 filing is that the total revenue for Q1 of 2021 was about 2.2 million euros. So that is dollars, of course. So that is for just one quarter. So if you annualize that, that means that in an entire year, there would be about 8.8 million euros in revenue, right? So that could make sense, but do keep in mind that they are likely going to increase their revenue over time in the next coming quarters. So that is why I've decided to come up with a revenue number of 10 million to be a little bit more on the higher side compared to 8.8 million. And that is also a little bit based on the 10K, the annual filing of 2020. Here we can see that they had $6.2 million in revenue of 2020. So if you take this number and multiply that by like a 60% growth, more or less, you're going to arrive almost at $10 million as well. So that is the number that I'm going to be using. But if you think that the revenue is going to be higher, maybe change it, maybe make it a little bit higher. Or if you think it's going to be lower, then make it a little bit lower. But it is the number I'm going to be working with, and it doesn't really matter that much. But yeah, you're going to get the picture anyways. So when we have these numbers, when we have these market caps, when we have these revenues, what we can now do is we can calculate a price to sales ratio, which is basically simply by taking that market cap and dividing it by the amount of revenue they are going to have in 2021. So we can see that for TPGY, which is merging with EVbox, we can see that the price to sales ratio is about 13.5x. And the price to sales ratio of Blink is 120. So that is almost 10 times as expensive. And then we're also going to look at how much cash both companies have and what kind of EV to sales ratios they are operating at. EV to sales means enterprise value to sales ratios instead of the price to sales ratio, which is market cap to sales ratio. So for that, first of all, we have these market caps. We calculated them in a previous step. We are now going to look at how much cash both companies are going to have on their balance sheets. Now, we can see over here in the updated investor presentation for TPGY, this company is going to have $420 million in cash on their balance sheet. So that is the number that I put over here in my Excel sheet, 420 million. And if we go to this one over here, we can see that according to their latest Q1 filing, they had, as of March 31st, $232.2 million in cash on their balance sheet. So that is the number that I put over here. So then you can determine the enterprise value by taking the market cap, which we had previously calculated, of course, and then you can take these numbers and simply subtract the amount of cash to arrive at an enterprise value. So that is basically what the company itself is worth, apart from the cash on their balance sheet, of course. So these are the numbers for both companies. For TPGY, for EVbox, it's a little bit more than $1.5 billion, and for Blink Charging, it's a little bit less than $1 billion. So that means that we can now also determine a EV to sales ratio, which is again the enterprise value. So these numbers we have just calculated versus the sales of a certain year. So we also calculated that for 2021. Those were these numbers, 145 million for TPGY, for EVbox, and 10 million for Blink Charging. So that is going to give you a EV to sales ratio of 10.6x for TPGY, for EVbox, and 96.9x for Blink Charging. And then we're also going to look at some other numbers that could be interesting for you as an investor. First of all, the amount of EV charging stations that both companies have. We can see, according to the updated investor presentation of TPGY, that EVbox has already sold more than 235,000 charging ports. And we can also see that, according to this investor presentation, that Blink Charging has now deployed more than 24,000 charging stations. So that means that EVbox has basically sold almost 10 times as much. Then let's also take a look at the years of experience that the company has and also that the CEO has of the company. For TPGY, for EVbox, we can see that it was founded in 2010. Blink was founded in 2009. And we can see, according to LinkedIn, the CEO of EVbox has been there for about 6 years now, since January 2015. And the CEO of Blink Charging has been basically there for the entire time because he was the founder of the company. So he has been there for about 12 years right now, because the company was founded in September 2009, according to this LinkedIn page. And lastly, also let's take a look at the employee count and some other stats. So we can see that EVbox has about 831 employees. They grew their employee count by 32% last year. So that is quite a bit, of course. And EVbox currently has about 35 job openings. And then if we go to Blink Charging, we can see 101 employees, a growth of 51% last year with regards to the employee count, and just one job opening. And let's then also talk about a few miscellaneous topics. For example, the charging stations that Blink has. Now, I do like this because they do have these media charging stations, as they call them. What they can basically do is do some publishing, do some marketing on top of their EVbox, or on top of their charging stations, of course. And I'm not entirely sure if EVbox has the same thing or if they're going to do the same thing in the future. So I don't really know that, but I do like that for Blink Charging. It's a little bit like Volta, which is going to merge with SNPR, that also has this marketing strategy. And I also noticed this image over here. I suppose they are working on this. They are not implementing this just yet, but it is something I've been talking about in my previous videos about EV charging companies, that I do see a future where you can put your car on top of a desk, or like a place, a kind of, what do you call it, like a parking lot or whatever, and then you have this inductive charging going on, which is basically like putting your toothbrush on top of that little pad that is going to simply charge the toothbrush for you. So I do think that is going to be very interesting, but I kind of think all the EV charging stations or all the EV charging companies are going to do exactly that. Also keep in mind that Blink Charging is mainly operating from the United States and EVbox from Europe mainly. We can see that in the previous video that I did about EV charging stations, and especially EVbox, so TPGY, is that in Europe, the EV sales are actually booming. We can see the annual EV sales in Europe up 240% within just 2 years' time. And we can also see the market share going up pretty exponentially almost in Europe. But at the same time in the USA, we don't really see the same thing happening. We see the annual EV sales going down over the last 2 years, and the EV market share staying flat at about 2%. And I also came across this article on investorplace.com. I'm actually going to put all these sources, as always, in the description, so you can check these sources out for yourself. But this is an article about 4 EV charging stocks to avoid, and Blink Charging was actually number 1 on that list. We can also see CLII, ChargePoint, and also SNPR, which is Volta. So these are, according to the article, the writer of this article, the stocks to avoid right now. We can see that Blink Charging is in spot number 1, but also we can see that EVbox is not on this list. And then the last part I'm going to be covering is the chart of both companies, both stocks. We can see that if we go to the chart since basically December 2020, we can see that TPGY has been outperforming Blink. But if we go to the view of year to date, we can see that Blink Charging is actually outperforming TPGY, or well, outperforming. It basically has gone down less than TPGY has gone down in the last couple of months. We can see that Blink is down 23% year to date, and TPGY is down 42.5 or 42.6% year to date. So yes, we do see that EVbox does have a market cap of 50% higher compared to Blink Charging, but we also see revenue of 2021, which is 15 times as high. We see a price to sales ratio, which is 10 times lower. We see twice as much cash. We see an EV to sales ratio of 10 times lower. We see 10 times more charging stations. We see 8 times more employees, and it has sold off more than Blink Charging this year to date. Look, I don't want to bash Blink Charging, but if you compare Blink Charging to TPGY to EVbox, then I do think that EVbox is the better choice. Of course, that is not financial advice. Now, I'm very much looking forward to hearing from you as well. Which one would you choose, Blink Charging or EVbox? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!